Good morning, traders and investors. Thank you for tuning in to Pre-Market Prep, your favorite place each morning to get your overnight news, your breaking news, trading ideas, and a whole lot of good education. Today is Thursday, February 13th, 2025. This is a good time, I think, to give a reminder that the U.S. stock market will be closed on Monday next week. We had a long holiday weekend for the President's Day in the U.S. Stock's pretty quiet here this morning ahead of the holiday weekend. Earnings out of Robinhood, Reddit, a couple software names moving pretty dramatically here this morning. AppLovin and Trade Desk. We'll probably get to Croc's earnings. Dennis took a new position in a really interesting name. He was maybe taking a little heat yesterday on Reddit from it, or excuse me, on Twitter, on X from it. We'll hear about what that is at 8:30 a.m. Eastern time. PPI is coming. And then our guest at 8:35 a.m., Mr. We are still in an inflationary environment himself, Jim Tassoni, CEO at Armor Wealth Strategies. We're going to take a quick look at the markets, folks. But first, let's run that pre-market prep intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Mr. Christian Fromhertz.
Yes, good morning, guys. How are we doing? So let's do just a quick rundown of the markets. And S&P futures just down slightly here, down 20 basis points. Around and round we go because we are exploring that range. It seems like almost every day or every other day, up, down, up, down, up, down. But ultimately, we're just not going anywhere. And the price action is getting, if you look at this chart here on the daily chart here, price action is just getting really, really tight in terms of eventually we are going to see a break, but I can't tell you exactly when that's going to happen. Let's move over to NASDAQ futures. They're outperforming a little bit here. They're also, the price action is super tight here as well, but doing just a little bit better this morning. Russell futures are actually outperforming a little bit. This got hit a little bit more. Bonds did move down yesterday. They didn't quite recover as much. And so small caps are recovering a little bit. Once again, explored a lower range and bounced back. I'm just going to show you bonds for the time being. They are right now up about 30 basis points. There's that big move down yesterday. So trying to bounce here a little bit. One other thing too that I was going to show, if I can do this appropriately, which I thought was very interesting yesterday, was what dollar futures did yesterday. They again are not making new highs here. They were very strong in the morning, but they turned back and did not go higher. Just to round things out a little bit, crude. I believe crude is down just a little bit, down 1.2% this morning. Nat gas futures, which I just wanted to cover these because I think these are the biggest thing that I see up in terms of commodities. These are up about 4%. And I'm just going to round this out with gold and what Bitcoin is doing. Gold is up again, up another 0.6 of a percentage point. That continues to ride the trend, down in the morning, but recovered quite nicely. And really, I would say outperforming Bitcoin, which Bitcoin here is teetering a bit. It did come back again from the lows yesterday, which again seems like a big theme, but down this morning, down 1.9% and down below these moving averages. So that's a quick rundown, but I would say the theme for that is just round and round we go in terms of equities.
I like it. And let's bring in Dennis here. There he is. Dennis.
Gentlemen, how's it going? Did you get snow, Brentster? Did you get snow down in the D?
Got like three inches, like in Detroit. Yeah, I think Metro Detroit got a little bit more. Dusting. Nothing. Dennis is sweeping that off with his broom.
Yeah, Christian, what about you? Did you get some snow?
A little bit of like ice, because the temperatures have been a little bit different. So I tried to shovel a little bit this morning, and I was. To my chagrin, it was almost like thick ice this morning. So something different this morning.
What's going on with you,
up
Dennis?
In Georgian Bay, we got another foot last night, which was actually light because they said it could have been up to 20 inches here. But it's been so much snow this year. I just want to show you guys something. thing. So much snow this year. This is a local house, and the roof actually collapsed due to the weight of the snow. So this is what we're dealing with up here. There's so much snow that people are actually going on their roofs and shoveling off the snow. I've been up here in this area, coming up here for almost 20 years. And I'm just going to stop presenting here now. But I've been up here for almost 20 years, and I've never seen this much snow here. So this is just, incredible.
Wow. You didn't get up on a roof, did you, Dennis?
No, what we have is a roof rake, Costco, exactly. So I have a roof rake. So what you do is you reach from the ground, you pull off as much as you possibly can. I'm too old to go on roofs here now and start shoveling off. And the second thing is, somebody was saying, well, you get up there, you could fall, but I'm going to fall into 4 feet of snow, so it's probably not going to be that bad because it's 4 feet of snow on the ground. But I mean, people are literally around this area climbing up onto the roofs and shoveling it off, because you look, and I was Googling it yesterday, how much snow can, your average roof hold? And it actually says most newer houses are built to withstand at least 2 feet of snow on the roofs.
Wow.
I'd say in this area, we are probably perilously close to those numbers. So where we're seeing, just so much snow. So incredible. It's incredible to see, people are dealing with it as best they can, obviously, but there's just so much snow.
Look at this comment from the Crow, Dennis. You're going to love that. It's like Hoth.
It does. It looks like right there. I actually we're on a bay here, and I tweeted out a picture of the skating rink, and it just looks like Hoth. The tauntaun.
Yeah.
On him. It's literally the planet Hoth. That's where I live right now.
Roof rake. I learned something new today.
I had no
natural
idea,
gas.
Christian.
That's the conversation. Natty gas. Got to be good for natty gas, right?
Sure.
All this cold weather.
Sure. All right, guys, you want to jump into a little earnings talk? How about we start off with Robinhood this morning? Robinhood shares up, I'm seeing about 12% right now. They had better than expected on both the earnings and the sales. Seeing GAAP earnings of $1.01, sales of about 1.01 billion. Analysts were looking for under 950 million. They gave some CapEx guidance. They gave some adjusted CapEx guidance, but nothing like hard guidance wise. What are you guys thinking about Hood here this morning?
Chat has it right. Whoever sent that message, this was a no-brainer, and I'm mad at myself as well, because we know how much trading has been going on. We know how much crypto trading has been going on. You can just see, people talking about it, and obviously this is a big, bump for Robinhood in the earnings. The earnings were incredible. The numbers were incredible, and the move has been incredible. But again, everybody's scared of valuation, but valuation doesn't matter when the story is hot, and this company right now is firing on all cylinders.
Woo!
That's brings us out to new highs for Robinhood. So, very interesting how this is developed. And I mean, look at where the stock was just going back, 6 months ago. The stock was trading at $22. We're up to where are we, 62 this morning?
62. It's been some incredible, Christian.
This is, and I think it's going to go to our conversation here in a minute about how some stocks are doing extremely well. I'm just going to bring up one other stock too, because I'm long this name. I've been talking about it on the show, but this is Interactive Brokers. This is another one that had good earnings. So there's a little bit of a theme going on here too, but
people are trading.
The dips are getting bought in this, and this is a stock that I want to continue to go to at least, for the next couple months. I'm just going to continue to buy dips in this thing, and it's worked pretty well. I did this. I've been just kind of legging in and legging out, into legging out into strength and legging into a little bit of a dip. But it's a really good practice. It's just to go off here on trade school for a minute, but it's a really good practice, in my opinion, to find a couple stocks that you get familiar with and that you can do that with, that you think are strong performers, because Interactive Brokers, very similar to Hood, also had good earnings.
And when they bring up a stock like Hood, they have to look for an equivalent stock to bring down. And the equivalent stock is probably Reddit in this case, because Hood, Reddit are kind of, loved by social media in the same type of way. Stocks have been relentlessly higher here. And this is to your point, Christian, that you were making earlier. This is why the indices don't seem to get any traction, where the actual indexes aren't blasting off, they aren't getting killed. It's because every day it seems like we have a stock up 20%, a stock down 20%. Today, there's a lot of stocks up 20% or down 20%. Reddit and Hood aren't up and down quite that much, but Hood up 13. I think they're countering with Reddit here today. Reddit's down 9. But the Reddit dip has already been bought. It got down there to about $171 last night. It's back up to $196. So this retail darling, and again, buying dips on retail darlings has worked. So, you're seeing this stock pop back here this morning. Brentster, you have the Reddit numbers, and then Christian's going to break down some technicals in this one.
Perfect, Dennis. Q4 earnings per share, 36 cents, beat 25-cent estimate. Sales, 427 million, beat 405 million estimate. Sales guidance for Q1 looked pretty strong, 360 million to 370 million range. Analysts down at about 358 million. They gave some adjusted EBITDA guidance in the range of 80 to 90 million. I'll kick it over to you here, Christian.
Yeah, and I was just looking because I've heard that this name. What's the metric that you use, Dennis, in terms of valuation? Because I know that this is an expensive one.
I mean, it depends on the type of stock. If you're looking at value names, you're looking at PE. If you're looking at growth names, you're usually looking at, the sales growth, and you're looking at, price to sales, and you can look at different metrics depending on the different stock. This valuation is insane. I can go break it down for you really quickly here and just look. But again, valuation, I'll say it again, I keep saying it. Valuation doesn't matter when the story is hot. Is this enough to cool off the story, this earnings report? I'm not sure. The earnings weren't that bad. So PE on this thing, forward PE, so projections of earnings, is 185. Price to sales on this puppy is 33 times earnings. 33 times sales. I mean, this is nosebleed, as nosebleed as you get. But again, if the stock is loved, people will not care about valuation. Just look at Palantir, which is, maybe a comparable, because it's, if you want to talk nosebleed valuations. Palantir, amazingly, I don't think I've ever seen this before, is trading 100 times sales. I don't know if I've ever seen that before. Not 100 times earnings, 100 times sales. I'm not sure I've ever seen a stock trading 100 times sales. Maybe for some little startup or something, then they're infinite. But I mean, for a company that's established, been established for a long time. Palantir, is not just a company that came out last week. It's been established for a long time. IPO back in 2020. I don't know if I've ever seen that. 100 times sales. But it still doesn't matter, because when the story is hot, valuation doesn't matter at all. And all it matters is that things are going higher. I mean, really, when you enter crypto and Bitcoin, valuing things from a traditional perspective is difficult, because Bitcoin is really nothing. All it is numbers, digits on a screen, but people are paying more and more for it, and then it goes up. And I'm long Bitcoin. So, I mean, I'm really invested in nothingness as well. So, I mean, it's difficult to just, in this 2025 investing, to say, hey, look, this thing's overvalued and eventually it's coming in. You could have said that at $40 on Palantir and now be down, 200% plus on your short. So shorting stocks when they're just in rocket ship mode is a recipe to lose a lot of money. People keep trying to short Palantir. They keep trying it. The stock keeps continuing to go higher. Maybe you get a lucky day or two in there, but this has been a tough short. Back to Reddit, though. Yep.
Yeah, so this is kind of interesting because, I am a momentum trader and very much use the charts, but sometimes I do look at fundamentals, and sometimes that gets in the way because I haven't been able to, same thing with Palantir. I know how expensive this is, so it's too difficult for me. I know that in the back of my mind, and my conviction gets a lot lower when I trade something like that, because as soon as I see it turn red or something like that, I think, oh my God, this is where it's going to correct. So it's very difficult for me to stay in a trade. Sometimes it's better when you know less, because same thing with Reddit. It's a very expensive company, but there's a theme here. There's a story. I think that people think that this is a new way of getting information and a cleaner way to do it. There's a lot of people who like this company in terms of use and so forth. But in terms of the technicals, watch 188. It did bounce really nicely. That is, if you look at 188, I'm just going to bring the chart back here. That is what we're looking at here in terms of the top of the value area for the month. And that's a nice bounce off of that. And if this is something if this is a company that you really like, you're getting getting a dip, and obviously it's being bought this morning.
Yeah, and I mean, from a trading perspective, buying dips on strong stocks typically works. From an investing perspective, I don't know. Like if you put Reddit in your long-term portfolio, $198, and look at it 10 years from now, are you going to make money? I don't know the answer to that question because bubbles can burst at any time. We have been through this. Like people say this is a new market. We've been through this in 1999 and 2000. I mean, Christian, when did you start trading? Were you trading back then the tech bubble burst?
Yes, that's that's right when I started my career.
Love
So
it.
it was for about 2 seconds, it was great, and I was like, "Wow, this is really cool," and I was learning a lot. And then for the next couple of years, I was like, "Wow," I was like, "Okay, this is." It was a really difficult time to start because of the frenzy that I started in. Because I felt, and plus I felt like I missed like all those people making a ton of money. I kind of just that's when I like started my first internship was when all of that was going on. So you didn't have any grasp of what was going on in terms of, hey, that the .com bubble was something very unusual and rare, and meanwhile that's how I started my career.
Yeah, and it's funny. So same time, I started 1997, went with Bright Trading 1999. So I had about a year and a half of the trading the tech bubble burst, and the guy beside me, his name was Todd. He would just buy Amazon on every single dip. And he would sell, so it would dip in the morning and he'd sell it in the afternoon and he'd make 20%. Like these are one-day moves. It just moved 20% in a day. And then the next day, not on earnings, just on nothing. That's how crazy the stocks were moving back then. So if you think it's nuts now, it was nothing like 1999, where you had stocks moving 20% on no news. And then it would dip 15% and he'd just buy the dip. And I'd look and he'd be down in it. And then an hour later, he's back up in it and he's selling it. I was like, how do you hold that? He's like, you know it's coming back. He'd be looking at me, you know it's coming back. And again, it worked and it worked and it worked. So, I don't know what happened to Todd after 2002 because sometimes these dips just didn't come back. Obviously, the average NASDAQ stock fell over 81% from peak to trough. And a lot of, stocks were down 99 or 100%. In some cases, we lost a lot of tech darlings too. I don't think this market is that. There is pockets of that. But there are so many pockets of just stocks not participating, so many pockets of weakness. It's just, growth versus value, and growth has taken over again here. People want a cool story. Social media drives that because, you get a cool story and everybody in the whole world's talking about the cool story. And, that's all that matters. And obviously crypto as well, because all these new crypto coins, Trump coin, all this stuff, I mean, it's all just really nothingness, but people will invest real money into this stuff. And you know what? The party continues. I don't know where the party ends. It's kind of a little bit like the hot potato game. And eventually on some of these stocks, the party might end. I'm probably not investing in Reddit. Would I trade it from the long side? Absolutely. If you're seeing these opportunities here. So as a trader, you have to separate yourself from the fundamentals.
Dennis, as a longtime fan of the show, I just want to say that stories from like the early trading floor, those are some of the best stories. We need to like work those in like once a week or like once a month or something like that, where it's like Dennis or Joel or Christian's trading floor story time. I just want to mention,
we certainly have a lot of them.
And you guys got a lot of them for sure. Just want to mention that we do have the producer price index reading here in about 12 minutes at 8:30 a.m. Eastern time. Yeah. We'll preview that real quick right before, and then we'll break in with the news right as it's hitting. Let's go over to another of kind of paired names moving dramatically here. We have AppLovin, APP, and Trade Desk, TTD, each other moving in sharp direction. Let's start with AppLovin. They reported Q4 GAAP earnings 173, sales beat at about 1.37 billion. Analysts were looking for about 1.27 billion. Looked like some really strong guidance out of AppLovin. They're expecting Q1 sales 1.355 billion to 1.385 billion. Analysts were down at around 1.32 billion. Shares here this morning up about 27%. What do you guys think of this one?
The stock just continues to go as well. Thrown in the same category as the Palantirs. Like I talk about the weekend trade, we're going on lots of tangents here today, and I think it's important.
It's good.
I always talk about my XBI weekend trade where I go in and buy XBI. I have expanded my weekend trade now to all the retail darlings. So I basically often go Palantir, depending on how the setup is going into the weekend, but I've been finding myself doing it a lot. Buying Palantir on Friday night, buying AppLovin on Friday night, buying SoFi on Friday night, I always have done the XBI, trade because I feel like Merger Monday comes for biotechs, and I feel like that trade is still there. I've done that for years here now, the XBI trade, but I've expanded it. And the reason I've expanded it is because those stocks typically get bid up over the weekend. Now, again, a couple of these weekends when the Trump dump happened, I really got hit on that. But overall, if you don't get a huge market sell-off, and you can hedge it. You can hedge it with Qs, you can hedge it with other things. Other things being equal, those stocks tend to get bid up over the weekend because people are talking about them again over the weekend. People are excited about them. So, so you see them getting bid up Sunday night, you see them getting bid up Monday morning, and it's just another opportunity that I've identified. So I often do the AppLovin into the weekend, and it has been working. Now, again, this is an earnings trade. This is like a huge move. This, again, if you're going to throw it in the same category as the Palantirs and, the Reddits, we might as well do evaluations trading PE of 50 times forward earnings. So it's not crazy, but it's not cheap. But it's not as crazy as some of the other ones. 28 times sales. NVIDIA's in there too, so it's not as crazy as some of the other ones, but it's nosebleed valuations for sure. But again, companies firing on all cylinders. Story is hot. Hard to be short those names. Christian, what are your thoughts?
Yeah, and this stock, by the way, I was looking at this going into earnings, and it was the options market was implying a 22% move, and it is just amazing how these names are moving this much into earnings. I had tried actually positioning in this about a week or two ago, and it just has been too choppy for me, and I kind of gave up a little bit because it just wasn't doing enough. Because sometimes it is waiting for new information, but it got a little bit frustrating for me trying to trade the stock for continuation purposes, and I kind of looked at it and said, well, geez, it's up so much from the last time it reported. Okay, it kind of makes sense. It's waiting for new information, but bang, this thing moves up to 490, and it's another situation. It's another one to watch. Dips will probably get bought. Keep it on your list. But just these moves that are happening on earnings, it's also locking you out because it's really difficult to buy a stock that's up this much. Just like we were talking about with Hood, this stock was trading at $80 back just last summer. The stock's up to $490. So, I don't know exactly how you sit long with the stock other than having a very small position with something, because I view that there's a lot of risk. But if you're willing to take risk in some of these names, some are working, some are not, which we're going to go to the next one. But I would keep AppLovin on your radar for dips to buy.
Christian's a great point, and we're going to go to the other one in a second here. But DeepSeek happened overnight, and you saw a lot of stocks fall 25, 30%. You have to be, when you're in these stocks, prepared for those kind of sudden falls. They can happen. When stocks go up like an escalator, we always say they go down like an elevator. The opposite is true too. Stocks going down the escalator often go up the elevator because everybody's crowded and they're in there. So when everybody wants out, they hit the exit at the same time. I don't know the timing of that. But right now, it's up again here. You probably trim and trail into it. If you're long this thing, congratulations. It's been awesome. From a long-term perspective, maybe it continues to grow into this valuation. I like the AppLovin a lot better than, from an investing standpoint, I would rather invest in AppLovin than a Reddit. I'll say that much. But, right now, story is hot and, valuation doesn't matter. But another point you were making earlier and we were both making is when something is up 27%, they find another stock to take down 27%. That's the market we're in right now. I know that sounds like voodoo, but it's something we're seeing every day. It's like the algos want to balance the indices. They want to balance the overall movements. When they really bring something up, they crush something else. Today's crushing is trade desk. So we have AppLovin up 27%, TTD down 29%. It's funny. These were moving in lockstep last night in the opposite direction, where you saw AppLovin trading up 20, TTD was down 20. AppLovin up 25, TTD was down 25. It's crazy to watch the divergence just going like that, percentage for percentage. So they've diverted a little bit here this morning because one's 29, 27. Do they come back again in? Maybe, which is just, insane to think about, but the algos, we don't know how a lot of these different algos are programmed either. But it seems like they're intentionally doing this, where there's something up 27, something else is down 27. S&Ps are flat, perfectly flat here today. This is how we do it. If you're buying growth, you're selling value. If you're buying value, you're selling growth. That's the market we're in here right now. TTD, Brentster, give us those numbers because it wasn't good.
Wasn't good, but it wasn't awful. They did beat on the bottom line, 59 cents versus 56 cents. Sales, 741 million. Analysts were up at about 759 million. Guidance wasn't great, but it wasn't awful. They're expecting Q1 sales to be higher than 575 million. Analysts are about at 590 million. So, like, it wasn't that bad, but I mean, that's where this momentum comes from, and that's what you guys are saying. One stock being paired higher, one stock being paired lower.
I mean, do you come in here on a trade desk and buy the dip on it? It's hit so hard. All momentum is now broken. It'd be all Christian's moving averages, I would imagine.
Right.
I would imagine. So it's difficult because now momentum is completely broken here. You're back down to where you were a year ago. So you can say, oh yeah, they're going to come back and buy this dip. And maybe they will eventually, but these ones don't tend to bounce back as quickly as some of the other ones. You get a stock that's moved up, gets a 10% dip, and then they always come right back. When you get these stocks that move up, now you lose 30%, and they're actually down a little bit into it. Now you're getting back into a congestion area where you were in 2021, 2022, 2023. I mean, Trade Desk has gone nowhere in 4 years. So now you're looking at this, and investors are probably, or traders are looking at this and saying, hey, this has been dead money for 4 years. I'm going to put my money elsewhere. So this is not the kind of stock that just bounces back easily. Now, again,
I'm going to give you an example too.
Yep. Please.
So number one, I went long this one for earnings yesterday, stinker. So I thought the chart looked good. Sometimes, I was like, okay, this is nice digestion. Like this could really work for a move up to 132. Sometimes they work, sometimes they don't. Yesterday, I had a real nice trade in Upstart that worked perfectly. Full profits or almost full profits on a call spread. This one didn't work. So a little bit of full disclosure there, but I want to give you a stock that very similar, in terms of had a trend for a while. And look at what Deckers has been doing. Right, Deckers missed on earnings. It has not stopped going down. Now the number is same. It's kind of a similar situation. It was not like, I don't think it was a horror show for Deckers, but once you break the trend like this, you have a problem. And so if you're going to be out there buying the dip, you have to think about your conviction and how many times you might need to buy the dip before it goes down. Because going back to this Deckers chart, it has not stopped going down. It went down to 180 on earnings. And this is, again, a little bit of trade school for investors, because you think, oh, I'm going to go out and buy the dip. The stock's down 25%. It goes down to 176. The stock is still going down. It's down at 156. So, it's not easy when you think, oh, I'm just going to go out there and buy the dip, because I did that for this particular stock and I had to stop myself out and get rid of it because I'm like, this thing is not holding where I really thought it would. And there's been no bounce back in it.
To quote Yoda, these are not the dips we're looking for. These are not the dips we're looking for. So that's where we're at here. Is there's certain dips that can be bought. Reddit dip probably gets bought because it's a trade, it's a loved stock. Stock like Deckers, broken trend, down significantly. Yes, it was, all-time highs, just, right before the report, but they turn. I mean, the same thing happened, with Celsius, and the same thing happened, with so many other names that we can mention, especially in the retail space. Retail's a tough space. Like when you're just in the retailers and trading these things, a lot of these stocks have really not done well. You have Amazon, which has been unbelievable. You have Walmart, which has been unbelievable. And you have Costco, which has been unbelievable. All the rest of the retail names have been junk. Really, they have. There's the odd exception, but there's been so many. Think about how much Crocs, and we can talk about this, is a good segue into their earnings, but think about how much Crocs was loved for so long. 2020, it went from like $20 to $180 in a year, which is just insane. Back down to 50, back up to 150, everybody loves it. Then, it's going down, down, down. It's been going down to the report. Low bar here for Crocs, so it is up here this morning. And we can give those numbers here right now if you want, Brentster.
We have PPI coming out here in like 30 seconds. So
let's
they're looking for month over month 0.3. So it's another high bar. Now CPI came in over that bar. So we'll see what this is going to be very interesting this morning. 0.3 is what they're expecting. Ex food and energy 0.2. We should get that number here in about 15 seconds. Year over year, they're looking for 3.3%.
All right, getting old because that was an Obi-Wan Kenobi quote, not a Yoda quote.
You're fine.
Chat corrected me quickly on that. Here we go.
All right, here we go. PPI coming in.
Comes in a
little hotter than expected.
No,
PPI,
light, I think.
It's in line.
In line. So we have PPI excluding food and energy in line, up 0.3%. That was the estimate. Year over year, core reading 3.6%. That one's a little hot. 3.3 was the estimate there. Why don't we take just a real quick look at jobless claims? Jobless claims for last week, 213,000. Expectation was for 216,000 jobs added. Continuing claims from a couple weeks ago, 1.85 million versus a 1.88 million estimate. How are the markets reacting here, gentlemen?
Robert said it perfectly.
Algo's confused.
I
Yep.
just threw it on the screen. That is the perfect thing, because you get these inline numbers. They're like, what do we do? Algo's, hey, bot over there. What are you doing? What are you doing, bot? I don't know what to do with inline. It's not clearly a miss. It's not clearly a beat. We don't know how to handle this stuff. So it's a little smidgen hot. Again, we got hit yesterday, rightfully so, on the CPI, and they bought the market back anyways. They just can't stop themselves. So if we get a dip here, do they buy it back? Probably. I mean, this is just the market we're in. Even IWM, the dip got bought in, which you'd think that's ground zero for this crap. But right now, market doesn't care. FOMO is the only fear that's out there. That's the fear of missing out.
And just want to make a quick comment on the jobless claims, the continuing claims. Not normally a weekly number that we highlight. We do get that data every week, so it's just it is a little. We need it a little less for the update. We did have, I think it was Blue Putnam on the other day, and when he was talking about that R word, that recession, he has prediction for a shallow recession in the U.S. He was kind of interestingly saying that he felt continuing jobless claims were going to be one of the first indicators of a recession. Those people filing for claims on a bit of a lagging basis. Just kind of interesting. Just wanted to highlight that. We do have Jim Tassoni in the background here. Do you guys want to bring him in just a few
bring
minutes
him into
early?
the conversation. It's
all right. Here we go.
This is perfect timing for Jim.
All right, here we go. Jim Tassoni. Good morning, sir.
Morning, guys. How are you today?
Doing well, doing well. You were one of the guys a few weeks, maybe even a month ago, who was saying we are still in an inflationary environment. How are you feeling about that statement after yesterday's CPI, PPI today? Kind of nothing too exciting, but what are you thinking about inflation readings with a little update this week?
Well, yesterday was kind of one of those beat my chest days, right? That we all have as traders, where we feel like we're somewhat vindicated after getting beat around a little bit the last, handful of weeks, being in that inflationary camp and short the longer end of the curve, while we saw, rates come down on the TLT and whatnot. But we still, I'm still in that camp that I think inflation's here to stay, at least for the near term. And if you need to be in the fixed income world, stay short in your duration. That would be my recommendation. And if you're a little bit more aggressive, like we tend to be, I think there's still room to the upside on, the longer end of the yield curve here. I think rates can still move higher, and that means the TLT and other instruments can still have some room to the downside. So that's how we're positioned. It works some days, not others. Hasn't been the greatest trade this year, but since we put it on last September, it's working pretty well for us.
They can't help themselves. They had to buy the dip here just to give you a market update here. We dipped down. It literally took the algos 3 minutes. Like, you going? The algo says,
wow.
Other algo says, yeah, I'm going. Okay, I'm going too. And the algos all buy the dip. That's where we're at.
Wow.
Jim,
so
back to just talking, reactions here. Obviously, you've been our TLT extraordinary trader here because you called. You were the only one that was bearish when it was up there at 102. And you're still are you still short TLT, or you've covered?
No, I covered, and then I reinitiated right around 88.5. So we're in the green on our second short opportunity, but not by much at this point. So it's kind of been running around on us. We're still holding that position. So that's where we stand as of this morning.
I mean, we had Dan Niles on CNBC yesterday, and I always follow Dan as well. And actually our guest yesterday was also our guest from Wedbush yesterday was also saying, similar to Dan Niles, is that they see a potential path where the Fed could actually raise interest rates this year. And I'm like, holy crap, that's on nobody's bingo card.
Yeah.
You know, like all of us are talking about rate cuts. And I was saying, well, maybe no rate cuts this year. The next step, if there's no rate cuts, potentially is possible rate hikes. If inflation does creep back in, and today's number is not fantastic by any means, but it's not bad. CPI wasn't good yesterday, but they bought the dip on it anyways. What does that mean? Like, I don't even know what it means. What are your thoughts on that, Jim? Is there, the potential that if inflation starts creeping back in, that the Fed could actually go back to tightening?
I mean, I guess there's a potential for anything, and we all know that after all of our decades in the markets, that never say never, right? But at the same time, I mean, that's not our base case, obviously, right now for rate hikes. We think inflation stays sticky and creeps higher. Like I said, we think we could potentially see the 10-year drift up as high as 5.5%, which I think would lead to a relative sell-off in equities. But with that being said, I'm not necessarily seeing rate hikes at this point. If that happened, I think I would love my TLT trade. And the fact that we are positioned more so into, I guess I would call them I won't call them inflation resistant, but hopefully at least sectors and stocks and areas that would benefit from some additional inflation more so than some of the other sectors.
Okay, so let's just say, we get into a potential inflationary environment. How are you positioning for that? Let's just say it's hypothetical, obviously, at this point in time, because inflation isn't all the way back here, but we're ticking a little bit higher.
Yeah.
If it continues to tick higher, if tariffs come in and are inflationary, and if we start to tick it higher, how would you position for that?
I mean, so obviously, first off is our TLT call that we've made. The second area that's our favorite sector and area of the market right now for a couple of reasons is we really still are very bullish on the financials. We love the financial sectors. We think that could benefit from increased interest rates. They get a better spread in our opinion anyway. And then two, we think that this is a great position to be in right now, given the fact that we believe that the Trump administration is going to look to loosen regulations across the board, and that benefits a heavily regulated sector like the financials. So that's one area that we're definitely positioned in. We've been long gold for a significant amount of time now. We're long the oil and oil stocks as well, which hasn't been as good. Now, I'll take a step back and say I'm willing to take a little bit of a hit in my portfolio for peace in Ukraine. Sometimes you have to step aside from just making money and say, there's things that are important than making money. So if the reason oil's selling off is because of peace in the Ukraine right now, we'll take that hit. We think oil and oil stocks are positioned well. And then finally, like I said, we like some of the metals, some of the industrial metals that we think could outperform in an inflationary environment. A new position that we put on recently, and we did it via the futures, is we put a position on in copper. If you're not a futures trader, you could use the CPER ETF to get exposure there.
So question for you, because this is something that I've been kind of thinking about too, and it goes along with bonds and it goes along with inflation. If this administration starts cutting, like they're starting to cut a lot of government jobs, and we've talked about a little bit about what will happen. We were just talking about if initial jobs comes up and so forth, but this is deflationary. Like if they really start going into and start, cutting a lot of these agencies and so forth, not to be political here, but you kind of have to think of the ramifications. So this is one thing that could actually bring down inflation if you start cutting a lot of people's jobs. It's a hard way to do it, but you're cutting a lot of jobs, government jobs, which I think could actually bring down inflation. Number two, if some type of a peace deal is brokered, then that's also, I think, deflationary too, to some extent. So these are going to be really some interesting things that are going to happen. So I actually I'm going to take the other side. I don't know with TLT. I don't know if TLT is going to crank back up. I'm really not sure what is going to happen there. But I think we may start to see inflation kind of top out. Again, like it takes time. Like there's a lot of this data that we're getting, like the CPI and the PPI. It's a bit lagging in lagging data. So I think that you're going to start to see these things happen. Maybe not the next month, but maybe in a few months. I think they're going to start to kind of turn the corner on this. Again, it's being a little bit political, but going back to your trade in financials. I like this trade too, because you're kind of hitting on different points. Like the gold is working very well. Let's go back to financials for a second. Which financials are you looking at in the group? Or are you looking at the whole group in particular?
Yeah, I mean, we tend to, I'm long the XLF. I'm also long some of the individual components of the index. I mean, we've talked about liking Apollo Global for a while. We think that that's a stock that's positioned really well in this environment. We like the big names. I mean, you can't go wrong with the JP Morgan. We think, if U.S. and overall economic growth remains strong or at least stable, we think you can still benefit from being in the MasterCards, the Visas. So I think that those are areas of the market if you want to look at individual names. But we're really just overall kind of weighted towards the XLF with some adding in those individual positions.
I mean,
Gotcha.
JP Morgan, I just want to expand on the big banks, because they've really performed well here. I mean, Citi has come back here, Bank of America. JP Morgan's just been a juggernaut. I bought this thing at 240 back towards when Trump actually got elected, because I'm like, you know what, banks probably benefit from a Trump administration. So I just put JP Morgan in the long-term portfolio. Just quietly, it's 275. I mean, it's just slowly, it's not something anybody talks about every day. But I mean, it's like slow and steady. It tacks on $1, maybe falls a little bit, but then tacks on another couple bucks and falls a little bit, tacks on another couple bucks. It's just slow and steady wins the race. So I think I agree with you here, Jim. I mean, if we do, even maybe the banks win in either environment. You could argue that, even if we get into a disinflationary environment, it's hard to argue, that doesn't work either. I think regulatory, easement, call it, from, the Trump administration, which we know he'll be easier, is probably the biggest benefit to the banks and probably the biggest reason why the next 4 years probably look okay for them. So I think buying banks on dips, I think I'm with you in both environments, even in an inflationary or even in a disinflationary environment.
Yeah, I mean, and it's to your point too. They're not moving as fast, so it's not getting that much conversation as a Robinhood, or I talked a little bit about interactive brokers. But this is also, like, sometimes, in my opinion, you need some. It's nice to have some of the faster moving things, but it's also nice to have a couple of the slower moving things, especially in this market environment that we've got, where things can really move fast, pretty quickly. So I like having a couple things that are more stable, but slow and steady. And I think that's a really important point, because the financials are one of the best performing groups. They're not breaking down like we've seen a lot of different groups. They are slow and steady, and they're working really well. So Jim, I like this trade. What else are you looking at?
Yeah, so the other things that we're kind of starting to look at is maybe moving a portion of our portfolio. We've been so US focused. I think that there might be opportunities to look outside of the US right now. And we're going to go kind of heavily contrarian, given the fact that the market's been beat up a little bit, but maybe following in the steps of the Oracle of Omaha, we're starting to actually get some of the Japanese stocks pulling up on our radar. And I'm sure I'm going to get eviscerated in the chat for some of these calls, but we're starting to look at things like Mitsubishi Financial, UFJ, the big bank, Sony, Toyota. Like, these stocks are starting to pull up on our screens as maybe we're not fully invested in them yet, but we're starting to look at them, thinking about dipping a toe there. We think that these might be interesting plays as sort of a balance in our portfolios against the, I guess I'll call them the Metas, the Netflix, some of these stocks that we own that have just been going gangbusters. So we like those stocks. The other thing we looked at, and I'll give you kudos on this, Christian, is we talked about getting into the Canadian ETF. And we actually have a position in EWC right now, but you pulled up the top holdings in that ETF. And one of the stocks that we think is really interesting, both now and on a longer term perspective, is Shopify. And so we've taken a position in Shopify too. That's a stock we like here. We think it benefits. It's got a good technical setup, but it's also a fundamentally strong company. We see, and my wife actually has a Amazon FBA business. And so we know firsthand the torture of being a seller on Amazon Marketplace. And she's actually opened up her own e-commerce store with a Shopify platform now. And there's so much more ease. They allow you to keep so much more of your profits, so much more of your revenues. I think with Amazon just continuing to beat up their sellers, we could see a relatively large migration of some of these Amazon-only sellers over to Shopify. So I think there's a fundamental case for Shopify on top of it looking attractive to us from a technical standpoint.
I love Shopify. It's basically the only big tech company in Canada that's like, really got a huge following over here. So I absolutely love Shopify. I'd have a little bit concern investing in the EWC just because we're like 23 or 22 days away from the new deadline on the Canadian tariffs. And we know Trump is going to play a hardball. He's not going to be easy. I had this conversation with somebody else the other day. He will probably be easier on Mexico than he will on Canada because Trump has flat out said he wants to make Canada the 51st state. And he wants to do that. And it's not a joke. For him, it's not a joke. He flat out said, this is not a joke. I think this really makes a lot of sense. And he's said the means for him to do that. Trump kind of talks his playbook. I mean, he doesn't hide. He talks his playbook. And, sometimes you don't even, it's not about reading the tea leaves. It's about reading what he actually is saying. I mean, he's talking about making Canada the 51st state. And the way he wants to do that is to break them economically. So, I mean, I don't like the idea, and I'm Canadian, but I don't like the idea of like putting more money in Canadian stocks here right now. Because if Trump is really serious about making this the 51st state, he's not coming to invade the country. It's not going to be like that. But could he break us economically? I mean, we're very dependent on the U.S., and I think it's a possibility here. So that's the risk. We saw what happened with the EWC the day the tariffs were announced, obviously. The stock or EWC went from 42 to 40, got cut 5% that day. We got the deal, the relief deal a few days later, and bang, the EWC is back up to 42. I think it's kind of wait and see game here, though. Obviously, if he gets a deal, a longer term deal, it's not 30 days, then that bodes well for EWC. But if tariffs start coming back, Canada is already been teetering on recession for a long time. I mean, tariffs, the 25% tariffs that they're talking about would put Canada into a full recession. So that's my concern with EWC. I'd rather see you just buy Shop flat out than just buying the EWC to play it that way.
And Dennis, I agree. That's definitely the big risk here. I think, like you said, and you hit on it, the idea is risk management, being able to manage the trade, but also seeing that if it is rhetoric, and we don't really know whether, yes, we can say, okay, Trump's saying he wants it to be the 51st state. He's going to try to break Canada economically. Or is he going to use it as rhetoric and a negotiating tool? And are we going to continue to push this out and or get a longer term pause or just a pullback from what he's saying? And if that happens, then EWC rips, in my opinion. So there is upside to the risk as well as downside, and that's why size the position. If you're going to take a trade in this, size it accordingly, manage your risk, and know where your out is.
Yeah, I mean, I like this chart here in EWC, but I would put my stop like right around 39.40, and that's also it's important to know like the volatility is not going to be the same in something like the ETF versus individual names too. So even if there is something that's announced, it will move, and I think sizing it appropriately is important. But I don't think that you're going to lose, like with the ETF personally. I don't think you're going to lose like 25%, 10%. Sure, okay. There's a chance at that, but yeah, very interesting. What about, so last question for you, Jim, is what about areas to avoid or short? I don't know if you do shorting, but I know that you have some areas to avoid.
Yeah, we short a little bit, but really, shorting, and I think Dennis talked about it with Palantir, and we're not looking in those type of areas, but shorting has been extremely difficult across the board, and so when we've tried to when we've tried to short, we're at least trying to hedge it. If we're looking to short a handful of names in an ETF, we may hedge it with that ETF. So, for example, we think that one way to hedge sort of the other side of our trade, because we always like to look at what happens if we're wrong. What happens if, like you said, Christian, there's more deflationary pressures that come in than inflationary, and we're wrong on that. So we actually have a short on a handful of names in the materials sector, but we're hedging it with a long in the XLB. So we're short Albemarle and Ball Corp, ALB and BALL, versus long the index. And so we understand that, there's obviously, like you said, more volatility in the names, but at least when you have an industry that's performing well, like it is, like the materials sector is, we're not just shorting the overall ETF and taking it on the chin. We can hedge some of that risk. That's one area that we're definitely trying to avoid. Another area that we don't necessarily love is some of the consumer discretionary plays, and especially things like we saw CVS rip, but we've been negative for a while. We continue to be negative on Walgreens, WBA. We think that that's just an eventual, if not a zero, possibly an acquisition target at a much lower price. So that's one area. On Pops, you could look to set up shorts. Estee Lauder's chart looks terrible to us too. That's another one. And then, Dollar Tree is another one that we think is just getting squeezed by some of these inflationary pressures too. So those are, I think you can look to either avoid, or if you're more aggressive, short those type of stocks against maybe the XLY in general, or some of the stronger performing consumer discretionary names.
Very nice.
Awesome, Jim.
I mean, I think that's a great way to kind of, play it too, because all of these stocks that you're mentioning, there's a good number of them that are moving down and to the right. So very good.
Yep.
Jim Tassoni, CEO at Armor Wealth Strategies. If you like the commentary that Jim was giving here today, he is on Pre-Market Prep every Thursday. That's a cool thing. So we'll see you next week, Jim. I hope you have a good weekend.
All right, guys. Stay safe. Stay warm.
Thanks, Jim.
Will do.
Thanks,
You
Jim.
too. Thank you, Jim.
Yep.
Good stuff. Good stuff
Yeah,
there. I
so
really like
market is-
the discussion on Canada.
No, and I mean, I'm Canadian, I want to be pro-Canadian, and people want to invest in Canada. I was going to say, well, that's a good thing, but I'm just a trader as well. And I just think we're on the countdown here. And I think this is going to play tough. I don't think it's going to be like the 25 days comes and it's like, okay, yeah, Canada, we're good. We don't see any fentanyl crossing the border anymore. I mean, that's really, what's the bar here? I mean, let's just think logically, because you know what? A lot of times you can trade with logic. I know in some cases you can't, but a lot of times you can. And what's the bar here? So obviously they want to see more protection. They want to see the borders guarded. They want to see the fentanyl coming in less. Are they like measuring it? And in 25 days we see less fentanyl coming in, and now we're going to, all of a sudden, not put the tariffs in? I don't know. I don't think it's that easy. I don't think it's that easy to just cut the fentanyl down. That's not Canada doesn't want, fentanyl coming to the U.S. They don't want it made in their own countries either, but that's not an easy thing to just break. And I mean, obviously, the Mexico's the same thing. So I just
Dennis,
think
one question for you. Sorry to I'm just going to change it up here for a second.
Go ahead.
So we've rebounded here, right? So we've kind of moved up. You mentioned buy the dip worked. Let's just have a chart of SPY in front of us.
Sure.
what is going to break this range? And because we're just continuing to move around this, what do you think? Do you think this range is going to be broken, or do you think that we're just, because we're getting? I mean, I can begin to kind of draw some more trend. I can probably draw another trend line in here, and we're getting. It's going to be getting to this point. And here's a trend line I could probably draw in here. But I mean, look at this. I mean, we are really getting, like, coming to the end of this point. This is going to break one way or another. Do you think it's going to be on news? Do you think it's going to be on something else? Because we're coming to the end of this point where something is going to happen soon. Maybe it's
so what could be the catalyst to take us out of there is what you're asking. We're coming out of earnings season. There's not a lot of big earnings left really to, we're obviously going to hear from NVIDIA. So that's going to be a catalyst. And when is NVIDIA's report, Friendster? If you can look, or
I think it's at the end of this month, maybe like the 26th or 27th. I don't know if it's
that's a long time
yet.
to wait another 2 weeks.
26th
NVIDIA report, the 26th, so 13 days. I mean, that can be a catalyst coming forward. But we really look at the earnings calendar coming. It's a lot of mid caps, lots of stocks still reporting here. I mean, we get Palo Alto tonight, Airbnb, Wynn. These aren't small companies, but they're not S&P movers either, where they're going to really move the indices here. And if they keep doing the 20% up on one, 20% down on one, maybe we just stay in this range for a while. I know we are looking for a breakup or a breakdown. My trade at the beginning of the year was the fade trade. And what I said when I made that is I think the indices could be in the same spot at the end of the year that they are right now, where the S&Ps are actually flat for the year. So, we have a lot of people calling for another 20% up here. Some people saying only 10%, some people saying, oh, we could pull back and crash. I think we're going to be, choppy, and I think we could just end up in the same place. So I'm going to stick with that prediction that maybe we just stay range bound. But, potential catalysts are NVIDIA earnings. But the other thing to the downside is tariffs. I mean, if the tariffs talk starts to come back, if, he hits Mexico and Canada with those tariffs, we all of a sudden are going to have a tariff tantrum again in the markets. And that's really what we had before.
But even the chat is saying this too, which chat's very, very good bringing up this comment. But what about the possibility of on the positive side of this war with Russia and Ukraine ending? Would that get us to basically gap? So I think it's worthwhile. Maybe we could even talk about this in tomorrow's show. What would be the positive groups if that happens? If the possibility of that happens, what is going to really rally off that news? What could also maybe go down on that news too?
Well, the markets rally overall on that news. If we get like peace talks, it's over, the war is over, market rallies. Oil goes down substantially on that news. Your defense stocks like Lockheed Martin, NOC, which have been kind of predicting this to a certain extent. I mean, look at Lockheed Martin here. The stock is just in this relentless downtrend here. They were breaking out, a year and a half ago when this war was escalating, when the war was getting worse here. I mean, maybe the writing is on the wall and the stocks are trying to tell us something here. You got your three major defense, General Dynamics, NOC, Lockheed Martin, RTX. All those stocks are not about RTX. It's the only one that's bucking the trend. But, they've been weak. They've been weak. Oil's kind of meandering here. So maybe it's telling us something, maybe it's telling us that there will be a peace deal. I don't know if that's the catalyst to just blast us off. It's like, finally we have peace and now everybody's going to be buying stocks. I think that would be a temporary bump up in the markets. I think it's a fantastic thing. Obviously, we want the war to end. From good of humanity, we want the war to end. Do I think that's a catalyst to take the S&P up 10%? I do not. Okay,
very good. We can maybe continue that train of thought for tomorrow's show.
I like it.
Do we want to hit any more earnings names? Because again, we got a bunch. I was going to look at Bros if that's something.
Sure. Go for Bros, yeah.
Money Mitch likes Bros. Money Mitch, I think, is gone from the chat now, but he's always liked the Bros. What do you see on the Bros? Let me get you the
numbers here real quick.
Get the numbers.
Q4 earnings 7 cents, beat a 2 cent estimate. Sales 343 million, beat a 320 million estimate. They did give a little fiscal year 25 sales guidance, about 1.56 billion to about 1.575 billion. Excuse me. Stock here this morning.
So stock is breaking out to new highs here. Notice like a little nice dip before earnings. I need help from the chat on this one because I don't have a Dutch Bros by me. I've been
me
asking
either.
people about this company for a while because the chart has been acting really well. Dips have been being bought and it's acted so well. But I feel like for consumer stocks, like I need to have a little bit of a basis of like, do I like the product? Because all of that kind of gives me conviction. So it's been to my detriment that over on the East Coast, by around New York City, we don't have at least I'm not aware of one. So, we've also seen Starbucks begin to kind of trend higher again too, something that this has had a hard time with. So, I'm curious to know, like, if I'm going to take a position in one of these, what do I do? Do I go long Starbucks or do I go long Bros? Chat, any thoughts about that?
And were you kind of, Christian, were you kind of asking about like anybody that goes to Dutch Bros, like what do they think of it also?
Yes, anybody who regularly visits there or who has visited there, they don't like it. Do they like it? So
Gabe says I've never heard of Dutch Bros other than on this show. Maybe they don't have them in Europe.
I don't have any of them around me either, so and I'm not a coffee drinker to really tell you about it. We'll give a shout out to Money Mitch, though.
There.
This was Money Mitch's stock. He was all about the Bros. He's drinking the coffee every morning. He was long the stock. I'm not sure if he's still long, but we'll give a shout out to Money Mitch because he was the one that really brought us the Bros. And I mean, this has been an unbelievable stock. So again, it's got a story. Check. I mean, really, when you're looking at investing in 2025 or trading in 2025, first box, does it have a story? Put that down. Write that down. Does it have a story? If it doesn't, they don't give a crap about it in 2025.
That's good,
like valuation. Oh, the PE on GM is 5. The PE on Ford is 6. It's got to go up because the PE is so low. That doesn't work, man. It doesn't work. Not in 2025. Maybe one day it'll work again, but right now value investing is dead. It really is. It's not been the way to make money. It's been story stocks. Palantir, PE is 100. I can't go any higher. It's impossible. I'm going to buy Ford and short Palantir. I'm going to make all this money. How's that working for you? So first box, does it have a story? If it does, that's a stock you should be interested in. Bros definitely has a story. Now, have we missed this story? Yeah, it's not a stock I've been focused on. Coffee shop. So I'm probably just say at this point in time I missed it. But it's not surprising that it's went. So I mean, that's what you need in 2025. The big box is, does it have a story? Does it have sales growth? You can start going down the line. But this market in 2025 is all about the growth, and it needs to have a story.
Now you initiated. I don't know if we want to go into the segment right now, but possibly we could also continue with it tomorrow. But you did initiate a new long-term position. Is that correct?
Yeah, I did. I've been looking at it for a while and waiting for a pullback, and I bought GameStop.
Pull up the chart, Christian.
So people say, "Oh my God, Dennis, you're the one who always said GameStop. Valuation's insane, nuts," and it's been pulling back, and it doesn't look like lovely on the chart. But what I think eventually happens is the writing is on the wall here too. I read what's happening in Twitter. I read what's going on. He's got a picture, of Ryan Cohen with what's his face from MSTR. I'm getting old and I forget names all the time, but strategy, obviously. So with the CEO, Michael Saylor, they got a picture together. What is that telling you?
Is that new? Is that a new tweet?
That was a week ago, and that's when the stock popped up. But they've forgotten about that now. So that was on the weekend. The stock had the big pop from 25 to 28. Now it's pulled back, but that's new information. New information is out there. They're telling you, without telling you, that GameStop is eventually probably going to do something with Bitcoin. Probably going to do maybe a Michael Saylor strategy where they're actually taking their cash, which they have a lot of cash, folks. So one thing to consider, GameStop is not a zero. They're $4.5 billion in cash now. Why? Wow. Because they did so many offerings. So they have no debt. The debt is minimal. They have a bunch of stores that don't, do well at all. But imagine, just thinking out loud here, imagine converting those GameStop stores into like crypto hubs or something, I don't know what they're thinking, but I think there's one. Is there a story in GameStop? First box I just said. Absolutely there's a story here. This stock is loved by so many groups of traders. It's got a huge brand. The brand has been built. Everybody in the whole world knows GameStop because of what happened in 2020. The brand is unbelievable. And they got $8 or $9 or $10 in cash. Now, I mean, you can say, well, you're paying, $25 for stocks that got $10 in cash. I don't know what they're cooking. Nobody knows what they're cooking. but they're probably cooking something with crypto. And if all of a sudden, out of the blue, they announce that, we're, got this big Bitcoin, deal that we're doing this, it could change things. So that's why I invested in GameStop just yesterday. So I think there's a story here. Now, this is speculative still. You are, investing, in a stock that's only basically got the cash and a bunch of GameStop stores that aren't doing very well. But there's so much potential for what they could potentially do with it. So I agree. It's kind of like a SPAC. It's kind of like a SPAC, and you're paying way up for the SPAC, but you're not going to get this at 10 or 12 bucks because there's just too much cash there now. And I think as they tweet more, that picture, and can you go find the picture, Brent? I don't know if you can just find it on social media or not quickly. Yeah, but that picture, I saw that and my jaw dropped. I was like, oh man, they are telling us. It was a picture of Michael Saylor, Ryan Cohen standing there together. Obviously, maybe he's just a fan, or maybe he's trying to say, we're going to do something with Bitcoin. Just imagine, and again, what sometimes investing is, it's headline prediction, like trying to think of like what they could say. They haven't said anything for a long time. Imagine GameStop comes out with this whole new business model of like, crypto hub or something, where they're doing something with Bitcoin that gets everybody excited again. What's the stock do on that, Brent? Stock go up from 25 to 35 just like that. It could go up huge. Right. Now, I think it continues to leak until something is announced. So you have risk. There's always risk when you're investing. The risk is probably down to $10 if they come up with nothing. But I don't think Ryan Cohen's sitting there doing nothing. I don't think Roaring Kitty is done here yet. I think there's a story here to be had. And I think I want to try to I don't want to miss that when it's kind of obvious. So that's why I took the investment in GameStop, even though I kind of, plug my nose and hold my breath as I do it. So here's the picture that was out there on the weekend. Got to have a Ford advertisement on top of it. They have to advertise like crazy because they're struggling so much. But that's the picture. I mean, that got investors excited over the weekend. The stock popped up, and now it's in, because nothing else has been said, and investors are impatient. They're like, well, nothing happened. They were saying, oh, there's going to be something announced in the Super Bowl. That didn't happen. But I mean, that picture is out there. So you can say it's gambling, but I don't even know if it's gambling. It's not, this is kind of prudent doing your research and just looking at what's obviously out there. I think eventually there's going to be a huge pop in GameStop. I don't know when that happens. It could be 6 months from now. The good thing is, when I don't do with options, I flat out buy the equity. I can wait.
This is a little bit of is this a little bit of a lotto trade for you, Dennis?
A bit. I mean, I would say, I think your risk is if they can't figure it out and they do nothing, you have risk down to $10 here. They could do another offering. Like they've been doing offerings too. So here's a risk too, is they do another offering. They're raising money, they're raising it for something. So you could do another offering, stock be down $22, $21, $20. So you can lose money on this. So I would say this is still a spec, definitely a speculative play. But I also think there's big upside potential here. So it's like risk reward. I think my risk is down to $20. I think my reward is $35, $40, $50 if something really cool gets announced and the story gets hot again. So, I'm taking a shot. Am I putting all my money in it? No. I probably put like 1% of my portfolio into it, if it's even 1%. So small. But again, I think there's an opportunity here. So that's my pitch for GameStop. There is definitely risk here. This is a risky one for sure. They're all risky. Everything. We go buy AppLovin, Robinhood. You're always risking in the markets. There's always can be a rug pull. DeepSeek showed you that even on a lot of darlings. You've got to be able to prepare to take drawdowns and stuff. I don't know if the play is with options, though, because I don't know the timing of it. Like if you're playing this with options, you could be 2 months from now, there's still nothing announced. So that's why I kind of just like flat out buying the stock.
I like it, Dennis. We ran over a little bit, but I did want to hear your thoughts on that new position. Thought it was going to be a fun one to talk about. Tomorrow, our guest, Tony Pollock, he's at Real Life Trading. That should be at 8:35 a.m. Eastern time. We're kind of out of the woods, like you were hinting at, Dennis, on earnings. We do have a couple earnings next week and the week after. But, I mean, for the most part, we're kind of out of earnings. Nothing really big in econ land tomorrow. So we'll be focused on price action a little bit. We'll be focused on our guest, Tony Pollock, again, Real Life Trading.
Awesome.
That's going to wrap it for today here, folks. Everyone have a good day. Good luck with your trades. We'll see you tomorrow.